I've been investing for almost a decade now, and with the new tax year rolling around, I thought I would open a brand new stocks and shares ISA, fund it with £1,000 and add to it every single month, and then share the journey publicly with you guys. That means I'll share every single gain, every single loss, every single portfolio blow up, and I'm going to be sharing it all on this channel, so make sure you subscribe if you want to follow along for the journey. Now, what is the goal? The goal is simple: to beat the market over a long period of time. So in this video, I have started a portfolio with 4 different positions. Now I'm going to run through the bull case of every single company in my portfolio, and then every single month we're going to check back in, see if anything's changed, update on news on these companies, and perhaps even add new positions to the portfolio. And of course, I'm going to be very transparent. If I've lost money, I've lost money, but if I've gained, I've gained. Now, a quick disclaimer, none of this is financial advice. Please do not copy my portfolio and do not invest with your own money unless you have done your research. And this video is purely for entertainment purposes. Do not copy this portfolio blindly. Please do your own research before investing. But if you are wanting to get started and open up your own stocks and shares ISA, then I've left a referral code with trading212 down below. So feel free to use that link to sign up. So let's jump into the first position and get started.
So the first position is the S&P 500, held in an ETF in the UK provided by Vanguard. Now, this isn't an exciting pick. In fact, when people talk about the market, this is usually what they're talking about. This is simply the top 500 companies in the world's largest and most successful market, the USA. Now, historically, the S&P 500 has delivered strong long-term returns because it continually adapts. Weak companies fall out of the index and stronger companies come in to replace them. And this has more historical information than any other position in this portfolio. In fact, you could check over the last 100 years and the annualized return has been 10% on average. In fact, when Warren Buffett, one of the greatest investors of all time, was asked what his investment advice he's giving to his children and his loved ones, he simply said, buy the S&P. It's a totally passive position. It will have its ups and downs, but over the long term, I have high confidence that the S&P 500 will continue growing on its high trajectory. And even at an annualized 7% rate of return over the long term, this is an incredible return on investment. And as you can see, over the last few years, the gains have been upwards of 20%. The bull case for this is simple. The world's largest economy continues to not only grow, but dominate for the foreseeable future as new technologies and Americans' best businesses continue creating value. Now, this position contains a share of most companies you've heard of in the USA, from Nvidia to Disney and Apple to Coca-Cola. This is highly focused on tech at the moment, but diversified over 500 different companies. And as the market caps shift over the decades, the portfolio rebalances automatically. Now, you may remember a few years back, Apple was the #1 company in the world. Now it's Nvidia, and the top company I'm sure will change at some point again. Now, this may sound counterintuitive to try to beat the market when my largest position is the market. But this is a core position that takes the extreme volatility out of some of the other positions in my portfolio out, while still leaving room to hopefully capture the upside when stocks are doing well overall. Now, I'm giving this position a 65% allocation, which makes it the lion's share of the portfolio and by far the largest position, and will be topped up nicely every single month. Now, when most people think of Amazon, they just think of the online store, Amazon Prime, that sort of thing. But you may be surprised to know that Amazon make most of their money with Amazon Web Services, which is a cloud platform that powers a large part of the internet. It's so widely used that even when you file your tax return with HMRC, that itself is hosted on AWS. Now, they have many different businesses under the Amazon umbrella. They have Amazon Prime streaming service, where you can watch things like Clarkson's Farm. They have Amazon Fresh Stores and the obvious logistics company, which you may have seen me do a few videos on Amazon Flex on this channel here. Now, I believe Amazon continues growing, but that wouldn't be enough for me to simply allocate 15% of my portfolio to it. Yes, it's a great business. Yes, it's growing. But what I'm really excited about is how they're going to use AI software going forward. Now, I mentioned earlier that AWS is Amazon's biggest profit maker. Well, AWS offers a service called Amazon Bedrock, which allows businesses to build their own AI products using Amazon's language models. The more AI grows, the more AWS may grow as well. Plus, they can use AI on their stores. AI can be used to show customers products that they are more likely in need of, therefore driving sales up, optimize layouts in warehouses, optimize best and worst selling products, and predict demand more obviously. And on the driver's end, it could be used to optimize routes and parcel allocation, which from personal experience often make very little sense. Now, this is mainly all software, and obviously hardware may play a part in the future, but I want to focus on AI hardware for the next position. So position 3 is going to be Tesla. Now, I do want to choose my words very, very carefully here and make it clear that I'm no Tesla fanboy. Now, I'm not going to spend the next few minutes glazing Tesla and Elon Musk, but what I will do is present a short bull case for Tesla. Previously, I talked about AI software optimizing Amazon's business, but Tesla has recently made a huge shift towards their robotics company and AI hardware with their Optimus robots. In fact, they've even stopped production of 2 of their models of car, the Model S and the Model X, to focus on the production and optimization of the Optimus robots. Now, when we talk about Amazon or any warehouse, let's face it, for better or for worse, eventually there will be a future where robot workers are in the workforce. Now, I don't know how I feel about that personally, but with Tesla, I at least believe that they can create a great product with these robots. Now, obviously they have their car business, their charging network, which as more and more cars become electric, this could grow and yield cash flow for the business. But honestly, I'm going to allocate 10% of this portfolio. And the reason why it's slightly smaller than Amazon is purely because Elon Musk often overpromises about delivery dates. Self-driving has been coming any year now forever. And while it may get you around San Francisco, a self-driving Tesla could not do the same around sunny Doncaster on a Saturday yet. So it's still a ways off for most of the world. Really, with any position in this portfolio, I could be wrong about that. But with Tesla, it seems like a gamble on promised future technology, which could come in and disrupt and yield good results, but it also feels like a pivotal turning point for Tesla, which caught my attention. Now, also with the SpaceX IPO on the horizon, there is the possibility of them getting bought out by SpaceX, which could be lucrative for investors over the long term. But that is a whole other can of worms, which we won't get into today. Overall, I would say I am bullish on Tesla, but the time to get a real pop on the shares was probably to be cost averaging in around about 2017, 18 and 19, ready for that big pop when the pandemic hit. That doesn't mean to say that Tesla won't continue to grow. The market cap is often much lower than things like Apple and especially Nvidia. So I do believe there is still a lot of juice to come out of the orange of Tesla, especially if they manage to nail the robotics part of their business. So finally, the last position, and the only company not included in the S&P, at least not yet, is Strategy, formerly MicroStrategy. Now, when we talk about market disruptors, I believe Strategy is starting to become a huge one with their digital credit products. Now, who are Strategy? What do they do? Now, if you've never heard of them, then they are the largest corporate Bitcoin treasury in the world, and it's not even close. If you look at your screen right now, they have over 800,000 more Bitcoin than the number 2, which is actually insane and could become a monopoly on Bitcoin, quite frankly. Now, I'm sure most people have heard of Bitcoin, so I won't go into Bitcoin too much, but I do want to give the basics just to further illustrate the point of Strategy. Now, there will only ever be 21 million Bitcoin in circulation. There are about 20 million mined already, and the last 1 million will take over 100 years to mine. That means that if every millionaire in America alone wanted to own just one Bitcoin, they couldn't. Add in a race between multiple treasury companies, several countries, and the fact that the fastest growing ETF in history was BlackRock's Bitcoin ETF, and you have a truly scarce asset that Strategy are holding over 4% of the entire supply for. So how do they fund it? How have they managed to get over 840,000 Bitcoin as of this recording? Well, there's several ways which can get fairly complicated, so we'll try and keep it simple. Now these are such as investor and institutional bonds, stock sales, proceeds from their underlying software company, but by far the largest contributor is their preferred stock, Stretch. Now, Stretch is fairly simple in concept. An investor buys it, and Strategy agrees to pay a monthly dividend, which is currently annualized at 11.5%, but could change up or down depending on demand. Now, when you invest in it, they take the money and they can do what they like with it. They can buy Bitcoin, they can top up their treasury, they can go and buy government bonds, but for the most part, they do buy Bitcoin with it. Now, this Bitcoin in future is presumably going to be used to pay the dividends in future. And they've often said that if Bitcoin goes up simply 3% per year, they can pay the dividends forever. But given that Bitcoin is a highly volatile asset, obviously this has the market worried. And that's why Strategy is down 70% over the past year, which I believe is a great buying opportunity. So the bull case is simple. The price of Strategy follows Bitcoin price, but to the extreme. As Bitcoin goes up, so does Strategy, but even more so. So that's it. That's the thesis. This company is issuing credit to buy one of the world's most scarce assets. And over the long term, they are hoping it goes up. And if it does, Strategy could truly be one of the largest companies in the world. Now, I don't want to make this last section a breakdown of why Bitcoin may or may not go up, so I'll just keep the section on Strategy short. Now, let me be clear, this is an incredibly risky position to hold. It is volatile and, quite frankly, is by far the most likely position in this portfolio to go to zero. But with that volatility is some potentially extremely lucrative returns, especially since I'm cost averaging in every single month. So if Strategy goes down even more, I'm getting a better price every single month. And that's why I'm allocating the last 10% of my portfolio to Strategy. So that's it, guys. As I mentioned at the start, this is simply my opinion on all of these positions, and it is not financial advice. Please do not copy this portfolio and make sure you do your own research. But what are your thoughts? Have I missed your favorite stock? Is there a glaringly obvious problem with my portfolio? Let me know all about it in the comments. Now, I'll see you all in a month where I'm excited to see what happens when the SpaceX IPO crashes the entire market. See ya!